Hey everyone, it's Lock here, welcome back. You've seen the stories, a few $100 turning into millions overnight in crypto. But let's be real, those quick flips rarely build lasting wealth. The real winners, they play the long game. Today, I'll share 6 proven strategies to help you build sustainable wealth in crypto, not just for the next bull run, but for years to come. Let's dive into a strategy that can help you navigate the exciting yet often volatile world of cryptocurrency investing. It's called dollar cost averaging, often referred to as DCA. This approach is designed to mitigate risk and simplify the investment process. At its core, DCA means investing a fixed amount of money into a specific cryptocurrency on a regular schedule, whether it's weekly, bi-weekly, or monthly, regardless of the current market price. This consistent approach is key to its effectiveness. One of the biggest advantages of DCA is that it takes the emotion out of investing. It removes the pressure of trying to time the market, which is notoriously difficult, even for seasoned investors. With DCA, there's no more stressing about trying to predict the perfect moment to buy. You're not trying to catch the absolute bottom or sell at the very top. Instead, you systematically average your purchase price over time, buying more when prices are low and less when prices are high. This strategy helps in smoothing out the effects of market volatility, reducing the overall risk associated with investing in a single lump sum. In the world of crypto, where wild price swings are common, DCA keeps you disciplined and focused on your long-term investment goals, regardless of short-term market fluctuations. When others panic and sell off their holdings during market downturns, or experience FOMO and rush to buy when prices are soaring, you stick to your predetermined plan, consistently investing at regular intervals. The best part is that you can easily set up automatic buys on most cryptocurrency exchanges. Many platforms offer this feature now. For example, you could decide to invest $100 a week in Bitcoin, regardless of its price. Some weeks, when the price is lower, you'll be able to buy more Bitcoin with your $100, and some weeks when the price is higher, you'll buy less. But, over time, you're consistently building your position and accumulating more Bitcoin. Numerous studies have shown that, historically, DCA often outperforms trying to time the market and pick the absolute best entry point. It's a strategy that can work effectively in both bull and bear markets alike, providing a more consistent and predictable investment experience. The key to success with DCA is consistency and patience. It's a long-term strategy that requires discipline and a commitment to sticking to your plan. DCA isn't about trying to make a quick profit or dumping all your available cash into the market at once. It's also not about constantly trying to predict market dips or waiting for that elusive, perfect dip to buy. It's about commitment, a commitment to a long-term investment strategy, letting time and discipline work for you, gradually building your crypto portfolio over time. If you're looking for a stress-free and relatively hands-off way to invest in cryptocurrency, then starting with a DCA strategy is an excellent choice. It's simple to understand, effective in mitigating risk, and a strategy that many professional investors use as a core component of their investment approach. Next up, HODL, a term that's become synonymous with unwavering belief in the long-term potential of crypto. It started as a typo, a simple misspelling, but it quickly evolved into a powerful rallying cry for crypto enthusiasts worldwide. The legendary crypto mantra. It's more than just holding, it's about holding on for dear life, even when the market throws its wildest tantrums. It represents a commitment to the underlying technology and the future it promises. Behind the memes is a real lesson, a fundamental principle of successful investing that transcends the hype and volatility. It's a strategy that's been proven time and again across various asset classes. Holding long-term, patiently weathering the storms and allowing your investments to compound over time. It's about focusing on the forest, not just the trees, is one of the most powerful ways to build wealth. It allows you to ride out the inevitable market fluctuations and benefit from the overall upward trend of the asset. Markets are noisy, filled with short-term speculation and emotional reactions. News cycles are relentless, and prices can swing wildly from one day to the next. But the biggest gains go to those who hold through the chaos. Those who can tune out the noise and remain focused on their long-term goals are the ones who ultimately reap the rewards. Time in the market, the amount of time your money is invested and working for you, beats timing the market, trying to predict short-term price movements and jumping in and out of positions. It's a game that's notoriously difficult to win, even for seasoned professionals. Every time. because consistently predicting market tops and bottoms is virtually impossible. The odds are stacked against you. If you bought Bitcoin at the 2017 top and held, despite the dramatic crash that followed, you eventually saw new highs. Your patience and conviction were rewarded as Bitcoin recovered and surpassed its previous peak. The same goes for Ethereum, which has also experienced significant price swings throughout its history, and other strong projects. Projects with solid fundamentals and dedicated communities have a higher likelihood of long-term success. Hodling is about conviction, a deep-seated belief in the potential of the technology and the specific projects you've chosen to invest in. Choose coins with real use cases and solid teams. Look for projects that are solving real-world problems and have a clear roadmap for the future. If you believe in the long-term vision, if you truly understand the potential impact of blockchain technology, short-term swings won't shake you. You'll be able to weather the volatility with confidence, knowing that the long-term potential outweighs the short-term risks. Yes, watching your portfolio drop hurts. It's never easy to see the value of your investments decline, but the biggest gains come after the biggest corrections. Market corrections are a natural part of the investment cycle, and they often present opportunities for long-term investors. Every panic seller, every individual who succumbs to fear and sells their assets during a market downturn is selling to someone with patience, someone who understands the long-term potential and is willing to buy low, knowing that the market will eventually recover. The market rewards those who stay the course. It favors those who are disciplined, patient, and able to resist the urge to make emotional decisions. Stay informed, keep up to date with the latest developments in the crypto space, and understand the fundamentals of the projects you're invested in. But don't let every dip or pump shake your confidence. Don't become obsessed with checking prices every minute of every day. Let your investments grow over years, not weeks. Think of your crypto investments as seeds that need time to germinate and flourish. Embrace the HODL mindset, cultivate a long-term perspective, and resist the temptation to panic sell during market downturns. Your future self will thank you. The rewards of patient, long-term investing can be substantial, providing you with financial security and freedom in the years to come. Let's talk diversification, the golden rule of investing. Going all in on one coin is risky. Spread your investments across different assets. Start with Bitcoin and Ethereum. They're the foundation. Mix in some smaller cap coins for growth, but keep a solid base in safer assets. Balance is key. Too much in small caps is risky, too much in just Bitcoin and you might miss out. Diversification lets you capture upside and minimize downside. Think of your portfolio as a team of veterans and high-potential rookies. When one coin crashes, others can hold steady or rise. A good starting point, 50% Bitcoin, 30% Ethereum, 20% in smaller projects. Adjust as you learn and as the market evolves. Diversify across sectors too. DeFi, NFTs, infrastructure. Don't fall for the all-in mentality. Diversify and you'll sleep better at night. The world of cryptocurrency is a dynamic and ever-evolving landscape. It's a digital frontier where fortunes can be made and lost in the blink of an eye. Crypto moves fast. New projects emerge daily, each vying for attention and investment. Regulations are constantly being debated and implemented across different jurisdictions, creating a complex web of legal frameworks. And the underlying technology, blockchain, is itself in a state of perpetual innovation. Projects, regulations, and tech change constantly. The pace of change can be overwhelming, even for seasoned investors. What's relevant today might be obsolete tomorrow. To navigate this complex environment successfully, you need more than just luck. You need a solid foundation of knowledge, a disciplined approach, and a long-term perspective. To succeed, you need research and patience. Social media can be a powerful tool for discovering new opportunities, but it can also be a breeding ground for hype and misinformation. Don't buy just because something's trending. Before investing in any project, take the time to understand its underlying technology, its goals, and its potential risks. Dig into white papers, assess the team behind the project. Are they experienced and credible? Do they have a track record of success? Check the team. Is the project gaining traction in the real world? Are people actually using the product or service? Look for real adoption. The crypto market operates 24/7, but that doesn't mean you need to be glued to your screen around the clock. Set aside time each week to stay informed about market developments, regulatory changes, and emerging trends for news and updates. The crypto space is unfortunately rife with scams and fraudulent schemes. The more you know, the less likely you'll fall for scams. The fear of missing out can drive impulsive decisions and lead to significant losses, or FOMO. The crypto market is known for its volatility. Prices can swing wildly in short periods. Patience is just as important. Market downturns are an inevitable part of the crypto cycle. Bear markets can last years, and they can be characterized by sharp and sudden price declines, with brutal drops. It's during these challenging times that true investors are tested. The real winners are those who sit through the pain and position themselves to capitalize on the eventual recovery, and wait for the next bull run. The crypto space is full of innovation, but not every idea will succeed. Not every project will win. The market is cyclical, with periods of growth followed by periods of consolidation, and not every cycle will go your way. Base your investment decisions on thorough research and analysis. Make decisions based on facts. Avoid letting your emotions dictate your actions, not emotions. If you've done your research and believe in the long-term potential of a project, don't panic sell during market downturns. If fundamentals are strong, stay patient. The crypto landscape is constantly evolving. Be prepared to adjust your strategy as needed. If things change, pivot. Document your investment journey. Keep a journal of your investment decisions. This will help you track your progress, identify patterns, and learn from your mistakes. Why you bought, what you expect, define your exit strategy before you invest, and what would make you sell. When faced with uncertainty or doubt, revisit your original reasoning. Review your notes when things get tough. This will help you maintain perspective and avoid making rash decisions. To stay grounded. Everyone makes mistakes in the market. Nobody gets it right every time. The key is to learn from your errors and improve your decision-making process over time. The goal is more good decisions than bad. The power of compounding can generate significant returns over the long term, and letting time work for you. By combining knowledge, discipline, and patience, you can unlock your full potential in the crypto market. Make research and patience your superpowers. The crypto market can be overwhelming, but with the right approach, you can cut through the noise and achieve your financial goals. In a noisy market, they're your best edge. Organization is key. If you're not tracking your investments, you're flying blind. Use tools like coin tracking, CoinStats, or Delta to see all your holdings, track performance, and set alerts. Being organized helps you rebalance, lock in gains, and hit your goals. These apps make tax season easier too. Set custom targets. Maybe you want Bitcoin at 50% of your portfolio, or to increase Ethereum over time. Rebalancing keeps your portfolio aligned as prices move. Good data shows what's working and what's not, so you can refine your strategy. Use read-only API connections for security, and always enable two-factor authentication. Staying organized maximizes returns and minimizes stress. If you're serious about building wealth, get your portfolio organized. Now let's talk about taking profits, the hardest part of investing. Set clear goals and exit points before you invest. Use a laddered approach, sell a little at each milestone so you secure profits but still have skin in the game. Taking profits doesn't mean selling everything. Move gains into stablecoins, diversify, or hold cash for new opportunities. Don't let greed take over. Nobody sells at the exact top every time. Focus on consistent, rational decisions. Consider taxes. Holding longer can mean lower capital gains. Celebrate your wins. Taking profits means your strategy is working. Don't beat yourself up if prices keep rising after you sell. Remember, nobody ever went broke taking profits. There you have it. 6 strategies for building real wealth in crypto. Success isn't about chasing hype. It's about discipline, patience, and sticking to your plan. If you found value, hit like, subscribe, and share your favorite long-term strategy in the comments. Thanks for watching. See you in the next one.